Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB on this record-breaking Friday. I'm Juliette Sarli. Lovely to have your company. We were just discussing on the close how not only did we push through 8,700 points on the ASX 200 today, we are getting close, in fact, to 8,800 points. It has been the best day since the fallout from President Trump's tariff calls in early April. But what a volatile week, because we've had 3 record highs this week, but also Wednesday was our worst day since May. Today, though, you can see the CBO 200 up 1.5%, the ASX 200 also up 1.5%, its best session since the 10th of April, and up by more than 2% over the week, marking the largest gain since the first week of May. Now, this is a solid rally, a FOMO trade, if you want to call it, the taco trade, all 11 sectors higher, led by healthcare, which was sold off earlier in the week after President Trump warned that those pharma tariffs could come into place by August 1. So it really has been a day of records, another day, in fact, and another record. And BHP really lifting the market, or giving it wings, if you will. And that's really on the fact that the so-called Big Australian delivered an uplift in tonnes of copper to a record, up 8% to over 2 million tonnes over the year. Iron ore output also reached a new peak. West Australian iron ore producing 290 million tonnes, and that was despite those cyclone disruptions that we had earlier in the week. So BHP powering this market along. And also a stock blast, Meso blasting out of the blocks today, up almost 40%, announcing strong sales of its cell therapy. So a very solid session, coming on the back of course, records on Wall Street as well overnight. And we had Squid Game really lifting Netflix in the US. Let's have a look more broadly at healthcare. CSL up by 4%. We mentioned Mesoblast there, finishing off the highs of the day, but still an impressive 32% return. When it comes to the big Australian, BHP shares closing above $40, up almost 3%. Rio Tinto also looking solid, along with South 32, which is updating the market on Monday, I believe. And a quick look at the tech players as well. It's really hard to find a loser in this market. Zip there, up by some 8%. We mentioned BHP firming after a record haul for iron ore and copper production. CSL also higher, coming back from that sell-off in pharma stocks earlier in the week. And Mesoblast announcing strong sales of its cell therapy Ryoncil, which became commercially available back in March. Fletcher Building also rising, despite telling investors that volumes have steadily declined across most categories since peaking in 2022. And Virgin Australia jumping after UBS started analysing the stock with a buy recommendation and a target price of $3.90. It is Friday. That means Shane Oliver Day. Let's welcome the Chief Economist from AMP to the show. Always great to see you, Shane. But we mentioned the uncertainty, the volatility in markets despite these records, because as you put it, Tariff Man is back.
He certainly is. That said, I mean, it seems like markets are just climbing a wall of worry around the tariffs, around what he might do to the Fed and all the other issues. That said, so far, I think what's happened here is the markets have said, well, we've seen all this before, he'll probably back down. Of course, we've seen good economic data out of the US, retail sales overnight, fairly solid. Profit results so far from US companies, very early days yet, we're only 10% into the reporting season, has been reasonable. And I think the market's sort of thinking, well, you know, the Fed's not cutting rates yet, but there's still that hope that it might come soon. And of course, there was one Fed governor who's known to be dovish lately, Waller, saying overnight that he would support a cut in July, although I think he is a minority at the Fed. So all of those things have helped in terms of the international lead into our market. Then, of course, we've got that good result from BHP. We've got increasing confidence the RBA will be cutting interest rates in August after the softest jobs numbers the other day. And I think you referred to it there. There's an element of FOMO here. When you go through big round numbers, and this isn't the biggest of round numbers, but 8,700, you know, go through that fairly quickly after we went through the 8,600 level, it attracts some buying. People who were holding back, waiting to see what would happen, suddenly think, well, I better get in. Some of that is technical trading as well. And if we go through 8,800, I think it attracts more interest into the market. And so there is that FOMO element or momentum helping the market. And the other factor just worth noting is that July is traditionally a good month for our market, as it is in the US for the last 10, 15 years. So, it's sort of part of the seasonal pattern. That said, you've got to be a little bit wary because August and September are often a bit rougher. So we sort of take it while we can, but I think we have to allow that there are various threats out there which may cause a bit of volatility as we come up to that deadline of August the 1st on tariffs and various other issues kick in as we go through August, September.
Yeah, absolutely. There's the Trump tariff roller coaster and how we've really seen it play out. Thanks for supplying that chart to us. Another big story of the week has been Bitcoin and records here for that asset, which is now the fifth largest asset in the world. I mean, that's really defying the naysayers.
It certainly is. And I must admit, I've been sceptical of the asset class, but it has eked out a role for itself as a digital gold, if you like. And I think that became increasingly apparent to me over the last couple of years. And as you're probably aware, AMP took a small exposure to Bitcoin in May last year, when it was quite a lot lower than it is today. I think we do have to be careful in just extrapolating the gains since its inception in 2009 to now and saying, well, it's going to continue at that rate. As you can see in that chart there has been some slowing in the gains. We also have that volatile 4-year cycle in Bitcoin. Maybe it doesn't apply this time around again. Some people call it crypto winters. Maybe as the market becomes more institutionalized, it gets at a greater degree of stability, but time will tell on that one. But even if you look at that chart there and assume, say, a 2-3-fold gain on the 2021 highs, it takes you to somewhere between 135,000 to 200,000 for Bitcoin. So potentially still more upside from here. But I think if you look at the factors that are driving it lately, you've got a whole bunch of them. You've got ongoing worries about the US dollar, Donald Trump's erratic policy making fears as to what that will mean in terms of the value of the US dollar. So people are looking for a hedge against that. We've got more friendly regulation in the US. This week was supposedly crypto week in the US, with that stable coin regulation going through Congress and soon to be signed off by Donald Trump, as if it hasn't already been. So that's seen as a positive. The sector is becoming more institutionalized, greater institutional exposure. It's gradually becoming part of the mainstream. Way to go yet, but seems to be getting in that camp. I think it does seem to be attracting some money away from gold. People in the past would have gone to gold, now think, well, maybe Bitcoin is a way to go. And of course, you've got the usual momentum players in there. When it goes higher, that attracts its own demand. But I suspect, we could have some more upside from here as per those projections I just did. But of course, we always need to allow that this is quite a volatile asset class. So you don't want to pump all your money into Bitcoin and then get upset when it goes through one of those periods of volatility. Absolutely
not. Now, you mentioned earlier the RBA and the jobs number that we had today. This week, does that sort of, put paid to what we discussed last week about whether the RBA made a misstep in keeping rates on hold?
It probably does. I think the RBA might be feeling a bit nervous after leaving rates on hold, but nevertheless, I mean, they'd probably say, well, what's 4 weeks or 5 weeks between meetings? Look, I think that the evidence was overwhelming. The jobs market is slowing down. And you can see it in that chart there that my colleague Mee Bui has put together, which shows the level of various job vacancy or job ad indicators in Australia relative to the labour supply. And you can see they've all slowed down dramatically from the high, particularly those which relate to the flow of new job ads. In other words, the yellow line from Seek and the online job ads line in red. So that shows the flow of new jobs coming into the market. There's quite a lot less than there was at the peak, and it's sort of pushing down to average or below average levels. And that's telling us the labour market is weakening. It's taken a long time to show up in the jobs figures, but that finally seems to be happening. Yes, there's always issues of sampling with those labour force numbers, so I kind of think it's a bit of a lottery draw on the day what you get out of it. But the evidence in the numbers was quite broad based. Weakness in unemployment across virtually all of the states, bar I think one of them saw a fall in unemployment, all the others saw flat or rising unemployment. Weakness in job number of people employed for 2 months in a row. We've got underemployment up, not just unemployment. Hours worked was down, full-time employment was down. So it seemed pretty much across the board. So I think what we're starting to see here is weakness creeping in, and the Reserve Bank can't ignore that. I think we are at a point now where the risk to inflation are more balanced around target, whereas the risk to unemployment and growth are perhaps a little bit on the downside. And therefore, it's appropriate for the Reserve Bank to focus more on that, the full employment side of their mandate, as opposed to the inflation side, which I think suggests, yes, they should have cut last week. It's always clear in hindsight for these things. But I'm pretty confident they're going to cut again when they meet in August. I noticed the money market's about 100% probability of that occurring. I wouldn't say go that far, but I'd say it is about a 90% probability they will cut in August. And obviously, we wait for the next inflation numbers in a couple of weeks' time.
Indeed, we do. How do you sort of chill out on the weekend when you know you got it right and maybe the central bank got it wrong? What are you reading? What are you doing, Shane?
Well, I never get too carried away. You know, I mean, the worst thing you can ever do is celebrate your wins too much. I know we had this fantastic fund once, and it went through $1 billion, and we all got cupcakes or something. And I kind of thought, oh, yeah, maybe that's a sign we're at the top here. So you got to be careful about these things. You got to be humble in this business, and therefore I think it's always to keep a good song in your mind, not get too carried away at the top, not get too depressed at the bottom. And keep that song going. At the moment, I for some reason, you know, I saw the images of Donald Trump's ICE, what are they, Immigration and Customs Enforcement troops going through MacArthur Park in LA about a week or so ago, and I thought, you know, what the hell are they doing there? This is kind of horrible looking. But MacArthur Park actually is the name of a famous song, which was partly inspired by that park. So MacArthur Park is currently stuck in my head. I'm worried about the green icing melting on the cake in the rain in MacArthur Park, if you want to check out those lyrics.
All right, I will do. Shane, thank you as always. Have a fabulous weekend. Shane Oliver, Chief Economist, AMP. The stock of the day today was Mesoblast. Nadine spoke to Luke Winchester and Dean Fergie a little earlier.
Maybe this is the turning point. You know, maybe this is the year where they actually get some serious revenues, that it starts limiting their cash flow, and you can see some real commercial traction. Again, just sometimes these market caps I find a little bit mind-boggling, given the really modest top-line revenue and the huge cost base that they run at. So, you know, I just probably wouldn't be buying into it just for those reasons.
But it's an impressive start. I can actually understand why the market's getting excited today on that news. But I agree with Dean's point that the hard part's the starting point. You know, when I talk about Telix, at that time it would have been 300-400 mil market cap, something like that, just at a guess. This is already $3 billion, you know. I don't know enough about, I know they've got the stem cell platform, a bunch of other things in the pipeline. For the program today, we'll say a hold, and well done to people who have held it, particularly from, you know, those 2023 lows. But I was pretty impressed when I saw that. You know, it's not easy for a new drug to do that sort of revenue in one quarter.
Day on the local market, let's have a look at the market leaders in the session, and Mesoblast we've discussed at length today. Clarity Pharmaceuticals also doing well, as are a lot of the lithium players after the price of the commodity rose. Lithium miners moved higher on Wall Street. Liontown, PLS both higher by more than 8%, and Zip they're up by 8% as well. To the downside, Yancoal today, along with Medibank Private, Endeavour Group, Deep Yellow and Imdex. I wonder if Endeavour Group's being affected by dry July. Just a thought. All right, let's have a look at some of the small end of town. Sierra Resources, they're up 22%. Novonix also looking good. And in the laggards in the session tonight, Optiscan Imaging down 12%. We've got company earnings from American Express, Charles Schwab, 3M, Schlumberger and Trucet Financial. All right, tomorrow we also, looking ahead at next week, there's quite a bit on, in fact. We've got speeches coming through from Jerome Powell, also Michelle Bullock, and a lot of company earnings. So obviously the likes of big names in the US, Coca-Cola, GM, Tesla. locally, we're getting a lot of updates as well, which are important ahead of reporting season. I think AMP South 32 are among those. But it is a record session today, up 1.5% there on the CBO 200. The ASX 200 is firmer by 1.4%, 8,757, a fresh all-time high. So that is where we leave Friday. As Nadine mentioned earlier, there isn't really any risk on the table in terms of a non-farm payrolls report or the like tonight on Wall Street. So perhaps that's why people decided to stay invested. Whatever it is, whatever is driving this FOMO, TOCO, MOMO trade, we continue to breach records. All right, we'll do it all again from Monday. Have a safe and happy weekend.